So we're frequently asked that now the year we are just moving into 2016, and therefore which are the big opportunities for traders and investors via commodities into the markets. So I think there are 4 or 5 things which one could actually look at, and the first off would of course be gold. Now we know gold prices are crashing, we know the dollar is going to get stronger, and in dollar terms the gold prices will come down, but the rupee will also depreciate as the dollar becomes stronger, and therefore there is a level probably in the range of 24,000 rupees, 24,500, where it will bottom out in rupee terms, and you could look for a reasonable gain over the period of the next 1 year. Please keep in mind that we actually tracked the last about 35 years, and there is hardly 1 or 2 rolling blocks of 5 years in which you would have made a loss in rupee terms. So starting from 1980, when the Iran-Iraq war was there and gold prices shot up, came down at the end of, towards the end of the 90s, and then went up again during the first decade of 2000. And then again they've been sliding down. In all of this, if you have invested in rupees over 5 years, more likely than not, you would have got positive returns. So that's one of the things. The second thing which immediately comes to mind, of course, is some of the agri products. So for example, in pulses, in chana, for example, we know that there is currently a shortage in terms of what material is available in godowns, and we are also importing pulses to fulfill the requirement. Now, while we are importing, the dollar is getting stronger and the rupee is getting weaker, as we just said, and which means that for people who want to play on the plus side as an investment, then this is another one opportunity which is there on the exchanges. The third and very significant opportunity, I would say, and one which we frequently miss out, is that futures simply enable us, they give us the ability to sell and make money just as you could buy and make money. So I think catching the market on both sides is very important, and which is why just because prices are falling, it does not mean that a trader needs to stay out of the market. There are as many opportunities going down, and so especially true of 2015, as there are which are going up. Fourth, I guess, and very importantly, one plus I see this year is that SEBI is now the regulator for commodities. And I think SEBI is coming in within 2016 will definitely do at least 2 things. One is it will increase the number of products. So you have today only futures available in commodity markets. You will soon have options and indices trading available on the markets. The second big item there for SEBI is increasing the number of participants. So probably from the limited number which we have now, we could be seeing addition of banks, mutual funds, domestic institutions, FIIs. Over a period of time, you will see each of these getting added. And when you do that, you have new products and new participants in this industry, which will add a lot of depth and liquidity and width into this current industry, which will make the volumes go up from current about 25,000 crores per day to, I would estimate, at least 60,000 crores as we exit this year. And all this is, of course, already counts that the CTT is already there, and it is one of the reasons why the volumes had fallen. But that notwithstanding, getting new products, getting new participants in the market can once again make it the healthy liquid market that it was always meant to be, and therefore the chances of a trader or an investor getting more opportunities in this market will also increase significantly. So I think these 3 or 4 themes could be ones which one could look forward to in 2016.